Hello traders, I'm going to be marking out the chart levels for next week here. I wanted y'all to, I started marking a few of them already, but I wanted y'all to be able to get them down. You can follow along if you would like, or you can just watch it and put them all in later. Okay, so I'm just going through and moving all my 4-hour RTH, regular trading hours. If you don't have that, you change it down here. Regular trading hours only, because New York session is where all the volume takes place, and those are the levels that the market likes to refer to most. So we'll just mark those out. Of course, we had some opening gaps along the way here. It's not a bad idea to notate those. We could do it with a box. We actually opened here, but you know, if you look at those wicks, it kind of, price action kind of filled in, but this is actually an open gap here, the remaining portion. And I'll just put RTH gap on that. So if you go to a smaller time frame there, you can see, like say like a 5-minute. So we opened, or we closed the previous day right here. That's the settlement from there. And as we traded down, we only traded down to right there, creating a 4-hour RTH. And we also have another gap open right here. And we have a remaining portion there. And this is a 4-hour RTH. I got it blue, but it needs to be red. So we can just clone this one and move it straight up there. Because trading back down into those gaps is a possibility. And we can just do the remaining portion of it. We don't have to do the whole thing. It's always a good idea to mark out settlement. One thing that catches my eye right away is these two lines here. We created relative equal highs on the 4-hour chart. Why didn't we take those? Probably because it was a holiday and there wasn't a whole lot of volume on the holiday weekend. We do have, you know, we're going into a new month. Sunday is the last day of November, so we are going to be going into that new month, and we could have some unusual things happen. There'll be some big numbers coming out pretty quick. We also have down here a regular trading hour gap that was not traded into much at all. We can once again clone this and move it down there. So that's where we opened, and we just went straight up. There was no hanging out that day. Opening range low was the low of the day. The first candle. And that was settlement there. So we have this big area also as an RTH gap. So if you look at all of this, let's go back to the 4-hour now. Because what we really did was take back all of this move right here. We had that big move in one day, and then we just took it all back, and now we're up here into this fair value gap. This is actually an RTH gap too. You see right here. We opened here. We ended up trading into this gap a little bit. I don't know that we did, because this may be a different day. We opened here and we went straight down. So this hasn't had any movement right there. So we closed up here, we opened there. That's as much as we've gotten into that gap, is that right there. So that's an RTH gap as well, to the upside. So that definitely makes these a target as well as this a target. And of course, we got gaps up above. You know, been trading a long time, and I haven't ever seen this many gaps in the market. Gaps up, gap down. Some of them we fill, some of them we don't. We got one down here we never did fill. But there's been a whole lot of gaps in the market. A bunch of them here. We already traded through them. Worked through those. That October low was a big one there. When we went down on October 10th, that 1,000-point drop, and we thought, man, that was a big day. And then we surpassed it by the 1,200-point drop on this day, and then right back we came and took it right back. A lot of movement. So we can go ahead and mark some of these as well. If the price starts trading lower, you know, taking out some of these lows that we created last week. We didn't address any of them. We just went straight up, basically. Had a little bit of ups and downs, but the market was definitely wanting to go higher last week, wanting to take back all of that move. So having those levels on the chart, I think those are really important. We'll see how this week pans out. You know, we could start our Santa Claus. We may already have started our Santa Claus rally, and we're going to go to the moon now, or we could offer lower. Typically, if we're going higher, we should offer a little bit lower first. I mean, the market doesn't typically just run straight up and never stop, but kind of has been. Look at this. Up, 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 up. We never really had a pullback. So this may be the only pullback we get, and now we're going to go make an all-time high again. Who knows? It's really hard to say where the market's going to go. So if we start trading above this level, we need to have these marked up here as well. So that'll give us, if we start passing this one, then we need to start looking at marking these and this gap up here. Now, once we get all those marked, we go over to the daily chart. And we see which ones correspond with a daily high. Well, this one does. Both. Yeah, this one right here does. So that's important. We should mark it out. I think it's going to get taken right away, probably during Asia. I'll just put / daily. Okay. Any others? This one is a daily. Well, that's an important level. Where daily and RTH 4-hour align. That's two higher time frames in alignment. That's a target area. We'd have to come all the way down to here to get to that daily, and it doesn't correspond with a New York low. So the next one is all the way down here. The way the market's been moving, it could take it. It could take it. So go ahead and mark it out too. There we go. And I'm sure there's some more down here. I just didn't mark them. If we start falling out of bed, you bet your life I'm going to be marking them. So this one is most likely a daily. Let me just clone it and see. And I'll move it down here. I think that one's a daily and a 4-hour. And clone that one. Which one was it? There it is. There we go. Right there. So that'll mark every single one on the downside. And we go back to daily. You see that one is not a daily low. This one actually poked a little bit lower than the 4-hour. But it's close enough. They're relative equals. So yeah, if we do start offering down lower, these daily levels are important. Now let's look at the weekly. Okay, so this one is a weekly high as well. Uh-oh. I don't know what I did there. I got too many lines there in the same spot. I'm going to get rid of this other one because they're relative equals. And we'll just make sure we know this is last week's high as well. All right, 4 hour, daily, weekly. Good. And which one of these corresponds with the weekly low? Or any of them? There's the weekly low right there, right in the middle of that regular trading hour gap. And we don't really have one that corresponds with it. We should mark the low of the week though. Doesn't have to be. The only reason I would want to mark the weekly low is for this. You know what? I'm going to do it with a fib. Yeah, they don't matter. All right. So what I like to do on these, we took back all of last week's movement, the entire freaking week. So now I like to pan out that I've got these levels marked. We have a weekly high here we could be aiming for, just right above those. Doji candle on a week. No, it's hard to say what's next. I like to hide these for a minute and just kind of look at the weekly chart and say, if this was a 1 minute chart, what would I expect to happen next? I mean, we've been going up a good while. We don't really have anything to go off of over here because we're at all-time highs. But if I see a 1 minute chart come down, take out a low, and then respawn like this, I think two things I would be looking for there. A lower high, and then a push back down, possibly to this level, or that level, or even just that one. I took that one. So it would be, these would be our next levels that we would be aiming for. I would want to see a lower high and then a move back down. Or maybe that is the high if we're going downside. If we're going upside, I would expect to see a little pullback, maybe to half of this candle wick, or half of this candle at the most, and then push higher, maybe take out that high. If we're going higher, that's what I would like to see on the next 1 minute candle. But this is a weekly candle. We can still use those same parameters on a weekly candle. So we've just marked the high and the low of that weekly candle. I'm going to zoom in and make sure I get it on the high and the low. Yeah, that's pretty close. High and low's a little off. There we go. And this 4 hour regular trading hour right here is dead center week. Dead center week. So we can just change the label on that. 4 hour regular trading hour, and then 50% of last week. I think that's a really important level, and I'm actually going to change the color of it because my CEs, I make those yellow, and so that's an important level. What's yellow and red make? Orange? I'm not going to make it orange. Okay, so then our 25% level is right here. I like to mark it as well. So if we're really on an aggressive move up, we'll only get a 25%. I usually make those a light blue, and I dot them. 25%. I'll just put weak. I don't want that me. We'll know. And then the 75% level down here, you can just clone that one and move it down there. Should we start coming all the way back down there? Those are all really important levels. Price will dance in between those. It may just range through all this entire week next week, but if it does, these are the levels it's going to range off of. Okay, so now let's get rid of our fib so we don't have so many lines on there. And I think those are pretty much all the levels we need to think about. I mean, we could look at a monthly chart to see if we can glean some sort of information off of it. I mean, we've just been burning since April. You know, we had the tariff news, we came all the way down, we took out this fair value gap on the monthly chart, and we have just been absolutely burning to the upside ever since. No downside possibilities whatsoever, is what it looks like. You know, we had a little pullbacks here and there, but I think if we offer lower, we have basically relative equal lows down here on the monthly chart. I feel like these levels are really important, something we need to address. This one right here in particular, the low of that one is 23,016.5, and I've been talking about it for a while. We'll put a line on it and I'll just show you why. Right there, I'm going to make it red. And when we go to the weekly, ever since this phenomenon happened, I've been thinking we're revisiting that area. And every time we start going down, I start selling short thinking we're going there, but we never haven't yet, but we're going to go. So on the weekly chart, you can see relative equal lows. On the daily chart, daily chart doesn't look that intense. If you go all the way back to here, it does. That's a clean straight line on a chart, and when you see clean straight lines like that, you expect them to get revisited. It's like the bottom of a range that should be revisited, and so far we haven't been. We're getting closer. When we do our little fallouts, we are getting closer. So I think those will be our next target, and then this one ultimately, just remember the number. You don't have to put it on your chart. Just remember it. If we start heading down there, think about that 23,016.5 level. If we do start offering lower, we may not start offering lower until next week. Now, if you look at the daily chart here, there's a fair value gap on the daily chart, and I think, yeah, this candle right here, we filled it in this week. We filled in that daily fair value gap. We also have another one up here that we could be addressing, because these are relative equal highs on the daily chart. These are all relative equals. So we could be working up into this one, and then maybe even go to the all-time highs, or maybe this is our lower high that we reject off of. Maybe we get there and we fall out of bed. It's hard to say what we're going to do. All we can do is, as reversal traders, is when it takes this level, we're going to see what happens next. When it takes that level, we're going to see what happens next. Okay? And we just look for our pattern. So that's pretty much it for NQ. Now let's take a peek over here on ES. It's also in a 4-hour RTH. You can do this with any asset. If you're doing gold and silver, you have to keep in mind that they actually open a little earlier. And so I usually don't mark them out with RTH, but the regular trading hour does affect them. But I want to say, like, they open like 8 o'clock in the morning or something like that. I can't remember. They keep the same trading hours as what used to be on the floor hours for some reason. But the New York trading session does affect them differently. Okay, so I don't know why that's on there. Can't remember why I put it on there, but we'll get rid of it. So if we're looking at the regular trading hour here, we do have the gap here that we're working into. This candle looks like it went right to it. Right there. Almost a dead touch. That might be something. That might mean something. Might not. Why would we touch there and pull back? Kind of weird. That would mean we filled in this whole gap with that candle right there. maybe. If we do a 5 minute, we open here, we actually open here. So there's still a gap. Even though this candle wick does, it touched it to the tick, we didn't trade here on that day. And we only worked up to half of it, half of that gap. Okay. So, yeah, 4 hour. Let's just get our levels marked out here, and we'll go from there. I'll just get rid of that one. Then we'll make this one our high. We'll label it. Not sure. I think that was just my gap bottom that I had marked out. If we're going to have a settlement line there, the smaller time frame will give us a better picture of that. I'll show you the difference there. Okay, so if we go to a 5 minute, yeah, the line's pretty close today. Sometimes it'll be 20 points off, but it's right there at it. We're good enough. Make sure we make it dotted so we can differentiate it. Back to 4. All right, so now we're just going to start cloning and moving. This is the quicker part. Our next 4 hour high to the upside is here. I think it's also important to notate we closed right there. So that would be a settlement from the 12th of November. We closed early that day. 1:30 p.m. That's the whole candle. I don't know. I don't know what's going on there. But this would be gap fill. So I'll just color it that way and then write gap fill. I mean, it could be white, doesn't matter. I'll make it white because it's a settlement price anyway. You can go to a smaller time frame if you want to get more accurate on that, to make sure you put your line right where we closed on that previous day, which would be right there. All right, so yeah, that's a settlement. That's a gap fill. Back to 4 hour. 4 hour RTH. That line seems to move every time I get off and come back. These are relative equal highs on the 4 hour. See that? So label that right there. So relative equal. I usually just put REL and EQ, so I don't have lines running all the way across my screen. What else do we have on the RTH 4 hour? We got another one right up there that we can mark, and that kind of, those will be relative equals too, but this is actually a gap. We closed here and opened here. We did work into the gap a little, but we didn't fill it. So you could also mark that as another gap fill possibility. I'll just clone that other one. So that's going to be a gap fill. Go to smaller time frame, make sure it's in the right spot. We just look for where we closed the market that day. What in the world? There it is. Okay, so we closed right here. So we're a little off on that line. Not much, just a couple points. There we go. So yeah, we closed there. We never did fill that gap. So there's a little bit of gap fill opportunity there. All right, back to 4 hour. And we go much higher. We're working into all-time highs. We'll just see where we go from there. If we start getting above this line, mark these out. Now let's go to the downside. Clone that. We do have a little bit of a gap here. We closed here, open there, so there's a gap there. You can mark that as well. Same line, just clone it. Would just be the settlement from Thursday. We closed right there. And let's go to a smaller time frame, make sure our line is accurate. Yeah, it's accurate. Right there is where we closed. Okay, back to 4. So many gaps in the market. This being a low one, we need to make it red. Clone that bad boy. We have relative equal lows on the 4 hour right here. So we'll label that. And the next one is all the way down with another gap fill. Man, there's a lot of gaps. I don't think I've ever seen this many gaps in the market. So on this one, we opened here, we closed there. We just worked in a little bit of that gap. And so we're going to move this line down there again. And we'll just put gap fill right there. Go to a smaller time frame, make sure we're good. A little off on that one. And there's our close right there. We didn't work that much into it. We maybe halfway, a little less than halfway. Back to 4 hour. Clone there. And you see we have a fair value gap on the 4 hour regular trading hour right here. Clone it again. Put that there. And this is also a fair value gap on the 4 hour that we wicked into, filled it, and then went up. I remember watching that transpire and thinking, interesting. That's a respected fair value gap, even though we went all the way through the dadgum thing. It is respected, considered, because the candle bodies did not close beneath that low. And of course, another gap. Gaps, gaps, and more gaps. Right there. Smaller time frame. Make sure we're accurate. That one's close. I will leave it alone. Back to 4 hour. All right. I guess we'll go ahead and mark these two since the market is most likely going to range, but may go higher. We start falling out of bed, it'll fall to one of these levels for sure. And then also when we go to our daily and weekly, we'll be able to accurately mark out those. Okay. So that's our weekly low there. I think that's worth noting. I'm just going to make it dotted, and I'm going to put weekly low on that. Low of week. There we go. So that would be a daily low also. Daily, weekly. This one, middle of the line there, is going to be real similar to that 50% mark we saw on the other. So let's go to the weekly real quick. That's last week's low. Not this week's. This week's low is right at the gap fill. Okay. So we need to mark this out. And we need to put our 50% level. See, this one isn't quite at that. If we're going to go higher, we'll pull back around this 50% and then go up. So this is actually a daily, and it's also a 50%. We can mark that. I'll just put a yellow line on it and put 50%. This one is last week's low. We're going to delete it. But this one here, I don't know, the gap fill is so close to the low of the week. I don't know if we should mark 2 lines there. And or just label that one low of week 2. Let's just do that. We'll do it like that. Mr. Y, get in there. Y, rascally Y. There we go. And then we can mark out our 25 and 75% as well. And I usually mark them with a blue line. You can just leave the fib on there, but you can't get labels on it. So I always just put it on there, mark my levels, and then delete the fib. And there's our 75 right there. Corresponds pretty well with that. That's kind of nice. Okay. And let's get rid of that Fibonacci tool, measuring tool. All right, so we do have some interesting levels. We got gap fill to the downside. I wonder if I should change the colors of these gap fills, downside, upside, or just leave them all like that. See, if I made this one like a redder color, like that, maybe we would know it's a gap to the downside. And if I change this one to a lighter blue, we would know it's a gap to the upside. Maybe, I don't know. This gap fill would be to the downside. This one would definitely be to the downside. I'm going to make it bright red because it's also close to the weekly low. All right, that's a lot of lines, but I think they're all important. Very important levels. If we start offering higher, gap fill, this other gap fill up here to the upside. I mean, they're good. They're going to be important if we start offering higher. It could be a point of reversal, or it could be if we offer lower and then start heading up, it could be a profit target. So really important that you have the levels on there. Otherwise, you're just flying blind. I think that's it. If you want to mark some other, we do need to see where they correspond. So there was one of those I thought would be a daily. Yeah, this one right here. go. Any other dailies correspond with the 4 hour? Not really. This was actually last week. So we opened with a gap up for the week. Is that right? Yep. Monday, Tuesday, Wednesday, Thursday, Friday. So yeah, we have a new week opening gap right here also. Interesting. Okay, so yeah, I think this area right here on both charts, we have 50% pullback of the week if we're going higher. This area right here, I think, is important. I thought it was going to be at the daily low, but it's not. Weekly chart. You know, S&P 500 started making weekly all-time highs long before NQ did. Just looking at that, we came down, we took out these lows. Now we just shot straight back up. We could just continue up and start making all-time highs again. I mean, to me, where the chart's looking, if I'm thinking a 1 minute chart, I'm thinking we do that. Maybe we pull back half of this candle and then we continue up, or maybe we make that lower high and we start offering lower, because it has the same thing down here on the weekly chart, relative equal lows. We have these relative equal lows. These are going to be addressed at some point. Big fair value gap on the weekly chart. They will be addressed at some point. It may not be now. It may be in January, February, but they're going to be addressed. We don't leave levels like that on the chart untouched. Not forever. You can go back in history over here and you can see we don't leave them forever. If we have relative equal lows like here, we came down and touched them. Relative equal lows here, we came down and got them. They use the tariff news to get there, but we'll use some sort of news to get there. That's not even a 50% pullback of this run. And look at that. We haven't even pulled back 75% of this run. If we pull back 50% of it, where will we be? Right there at those relative equal lows. So that's actually at 59.72. Oh, actually, that's way up here. See, that's just beyond. That's just below 75%. Those are relative equal lows. Then we got those also. So it's rare that we just go straight up like this forever and ever and ever with no pullback. So this one did that for a long time and then pulled back. Whenever you, like if we say here from this run right here all the way to there, that looks like about a 75% pullback. If we go from here to here, it's about a 50% pullback. Let's just see. Yeah, a little bit less, a little bit under the 50% pullback. And then right there, those relative equal lows were the target. So if we pull back 50% on the run we just now took, which we will eventually, that's going to put us all the way down here. These will just be a stopping point, but we'll be heading all the way down to here. I don't know what it's going to take to get there, but something's going to get us there. All right, so that's that. I do want to address one thing before we move on. I mean, we could look at the monthly. If you've watched my live streams or anything like that, you know I've been struggling with getting stopped out. I'm going to go way back here beyond all of this just so I can show you, especially during that government shutdown. I was like, man, the market's just not behaving the way it should. And I went over a chart. I went over several different things. And there has been a lot of days, like even like Wednesday, we went up and then we just consolidated the rest of the day. If you didn't get that first move, you weren't going to get in on one. But I was like, the reversal patterns just aren't there. And what I discovered going back through the charts and looking at each one, like this day, for example, we came down, we took that low and we just took off running. There really wasn't a clean reversal pattern there. This one took the high, took off. Wasn't really a clean reversal pattern there either. But what I wanted to talk about is the actual reversal patterns. Okay, see this one. It's hard to tell where we opened. We opened about here. So this right here would be our reversal pattern. Went up. Maybe there's one there. But on these, like the 5 minute here, the components of a reversal pattern is that we take out a low or a high. Like in this case, we took out that high, I guess. And then we make a lower high. If you're in a 1 minute chart looking at this, I mean, this might be your lower high, that might be it. But we need to see that lower high and then pull away with a fair value gap. And what I've been doing is getting in on this push, entering at a fair value gap, and then getting stopped out on the return to make the lower high. On this one, there's a lower high there. These are actually higher, 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 but they're still lower than these. And then we pull away with a fair value gap. On this little setup here, this is our push down. That would be considered our higher low. And so what I'm going to do this week is I need to wait for that pullback. I need to wait for it to push down. If I put a fib on that, because that's what's been happening. I'll be up $200 and then all of a sudden I'm stopped out at break even or something like that. And it's been happening day after day after day. And that, I was talking to my trading buddy Adam, and I told him, I'm missing something because, I'm not having consistency. I'm catching some good days if everything aligns just right, and that's the days that the market just does that, and it doesn't revisit the low. So like right here, we did come down and we consolidated, but here's our breaker. I'm waiting for a fair value gap above that. And so I'd be getting involved right there, right in this area. I'd be getting involved, and then, or maybe even try here. But right there, we're a long ways off. If we come down and we try to make a higher low, I'm getting stopped out 100%. So that's what's been giving me grief. But as I went through the charts, I was noticing a lot of times, especially this week, we're going to have to get into like this one, we push down, we created a fair value gap, but the 1 minute breaker isn't until you get all the way down here. Well, it's still making a lower high. We're taking into that fair value gap, and then we're getting lost. But what I was looking at was a lot of times we're working off of a 30-second breaker or a 15-second breaker, but it's still referring to a down close candle. I don't like to go that low a time frame. So right now, to me, this algorithm is working off of this fair value gap. And instead of trying to get involved there, don't even bother. Try to get involved here. Now, that's just the way it's offering right now. I've seen other times where it just touches that and goes. Then in that case, you miss. You just miss the trade. I've seen it where it comes back and touches the breaker to the tick and goes. But in nearly every one of those cases, we come up and we make a lower high first, and then we run away. So like here in this situation, we make a higher high, and then we pull back and we kind of fill this gap, go up, and then what do we do? We come back down and we make a higher low. That's our entry. We respect this fair value gap. That's our entry for a push to that high. That's what I've been doing wrong. I've been trying to get involved right here, and then I move my stop to break even, and it comes down, stops me out, and then goes on without me. I'm going to fix that this week by demanding that higher low, and then a pull away with another fair value gap, which we had right here, very small one, wicked into it. That's my entry, and now we're aiming for that high. So the whole component of a reversal system is that we go up, leave liquidity above, come back, retest the bottom, fail to go any lower, and then go and take that high. That's the whole thing there. So entry there, take profit there. How many points you got? And there may be a better take profit up there. That's 13 points. That's on one, that would be 45, I guess, on an ES. One micro would be, yeah, right at $45. Is that right? No. One micro would be right at $75. So two would be 150 qualifying day. And if you had a level up here you were aiming for, you could even let it run a while. Maybe try to get to those. If you had a 4-hour regular trading hour marked out or something like that. But that's what I've been doing. That's what I've been noticing I've been doing. And then I'm also been very reluctant to join continuations. You know, these continuation moves. So, like say right here, we take out a low. Right here. And then here's our breaker to the upside. For more, if we're going up, we're going to go take out these highs. We need to respect this breaker. And when we don't, and we push through so violently, this is our entry to the downside. Because when a breaker fails, it's just as good of a signal that we're going lower as one that validates going to the upside. So consider that. If we've taken a low and then we make a lower low and then we respect that fair value gap, go short. You can do it with confidence. I promise you, you go through and look at all these. On days where we're directional, there may be 5 or 6 of these breakers fail like that. And all of them are potential entry points. So this one failed to validate. This one failed to validate. The high of that range in both cases, sell short. This one validated. Let's see, it's this one right here. Validated. Didn't take the high. Came down. Made a higher low. And then went up and took that liquidity. See that arrangement? Validated the breaker here with a fair value gap. I would be trying to get in here thinking I'm missing the run back up. And I'd get stopped out right there. That's what's been kicking my butt. I'm not being patient. I'm not waiting for this pullback because I think I'm going to miss the move. This one didn't even come back to that fair value gap. It just filled that one in. But that's okay. We pull away with a fair value gap. You can enter somewhere in here and then just try for those highs right there. It's not that many points, but it's points. You got in right there. That's 19 points. Let's say 20, $25 every 5, $100 on 2. That would be $200 qualifying day. So you don't even have to join the down move if you don't want to. The down move definitely had all the grease on this one. But yeah, I hope that helps. I'm going to end this live stream, but make sure to mark your charts up. Get it ready for Monday. I'm probably not going to trade Asia, but I'm going to trade Monday for sure. First day of the month. We'll have some big news coming out. Should be interesting.